Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. On today's show, we're taking a look at a front page article in the Wall Street Journal. I'm not one to often rant about articles in mainstream media. You could build a career out of that endeavor. But this prominent article in such a widely read newspaper was particularly offensive. The article was entitled, "Investors Buying Real Estate to Beat Inflation May Find Tactic Backfires." That was the title of the article. I was more offended by the slant of the article than by any of the detailed points in the article itself. The article seemed to imply that real estate's a bad investment in the current inflationary market environment. And I'm going to quote directly from the article. It says, and I quote, "Investors are eyeing real estate as a way to hedge against inflation. Many are bound to be disappointed. While single-family homes usually perform well during inflationary periods, values of offices, retail buildings, and other commercial properties can tumble in value if owners aren't in a position to increase rents, economists say. Since the Labor Department this month reported a 4.2% annual increase in April consumer prices, the highest rate since 2008, the prospect of inflation has become an obsession in financial markets. Many analysts and investors expect the surge to be brief. They suggest that the inflation jump reflects recent government spending, pent-up demand, and production bottlenecks during the reopening of the U.S. economy. These forces should subside as the economy continues to recover from the pandemic and more traditional spending patterns resume. With a number of U.S. companies warning of higher prices, more investors are seeking assets where value goes up when the value of money goes down. Residential real estate has proved to be a haven during inflationary periods of the past. Stanford University economist Monica Piazzesi studied U.S. inflation in the 1970s and found that home prices rose relative to the size of the economy, while stock prices fell, meaning homeowners became richer compared with stock owners. Owners of residential and commercial real estate are often better off during times of rapid inflation than owners of stocks or bonds. Office, retail, and apartment rents are typically tied to consumer prices and rise with inflation, pushing up property income. Inflation also makes construction more expensive, which benefits property owners because they can expect less competition from new buildings. There's also the crowd psychology. Real estate has a reputation as an inflation-proof investment, and more people buy it simply because they think others will too. But landlords who are unable to raise rents can suffer during periods of inflation. Okay, so I'm not going to read the entire article in the interest of time. And there's no question that there are risks present in almost any asset, but the article seems to criticize investors for piling into real estate, and this publication in particular completely neglects the fundamental pricing of certain stocks and the stock market indices. Of course, any investor needs to properly analyze any investment opportunity and recognize there are risks. Rent-controlled properties can face situations where expenses rise faster than rents in an inflationary environment. That could be death to an investor. But in that case, real estate isn't the problem. Buying property in a rent-controlled environment can simply be a bad idea. For example, I've been a landlord in New York State in the past. I learned my lesson, and I'm not going to do it again. There's no question that some assets in some locations may experience a rise in vacancy. Yes, it's more difficult to raise prices to match inflation in an oversupplied market condition. The author of the article seems to dance around one central issue without coming out and stating it. Real estate values follow the laws of supply and demand. Well, newsflash, you have to pay attention to the law of supply and demand. Since when did ignoring the law of supply and demand result in a good investment of any description? Show me any investment asset that operates completely independently of the law of supply and demand. All the author needed to say is that investors need to pay attention to the law of supply and demand when making investment decisions. Instead, he tried to paint the possibility of oversupply as a problem, which in some markets makes real estate a bad investment. He also tried to paint longer-term leases as a reason not to invest in real estate in an inflationary environment. There are so many things wrong with this article that I almost don't know where to begin. The fact is, we've experienced rapid devaluation of the currency steadily over the past 50 years, dating back to the early 1970s. Yes, we happen to be in a period of heightened inflation. Who knows for how long? But a broad retrospective look at real estate over the past 50 years of inflation shows that almost all asset classes in real estate have experienced dramatic resilience against inflation. 3 things get wiped out in inflation. Number 1, purchasing power for those on fixed income. Number 2, savings get wiped out. And number 3, debt gets wiped out. And since real estate investors tend to use a high proportion of debt in their investments, they almost always end up being the beneficiary of inflation because those long-term loans get devalued disproportionately compared with the other elements associated with real estate. Rents go up in price. Yes, operating expenses go up in price. New construction goes up in price. And it's that last item that causes existing real estate to rise faster than it otherwise might. And since the loan on the property doesn't go up due to inflation, the increase in price is always to the benefit of the equity holder, and therein lies the inflation hedge. As you think about that, have an awesome rest of your day. Go make some great things happen, and we'll talk to you again tomorrow.